Okay, what's up, Tribe? So in this video, I'm going to show you guys or explain to you guys what the multi-time frame analysis is all about. Okay, so multi-time frame analysis makes market structure more powerful by analyzing price across different time frames. The higher time frame shows the overall market direction, while the lower time frame reveals detailed price movements and entry opportunities. This approach helps traders align with the main trend, improve timing, and trade with greater confidence. Okay, so if you watch in this image right here, you could see that we have the 4 hour time frame, which is this one. You can see the 4 hour time frame, right? But if you scale down to lower time frame or the medium time frame, which is this is the intermediate time frame, you can see how we have these pullbacks. Okay, it is not as wide like as this, right? You can see short pullbacks here like this. Okay, now if you scale down further, you have little micro movements like this. So what we are doing when it comes to multi-time frame analysis is that we want to know the overall trend of the higher time frame, and then would align and take our entries on the lower time frame. Okay, so if the market has been trading, made this high here, made this low, made this high here, right? So we know this is a trend. Okay, so we are anticipating for market to fall back maybe to the previous high here, right? And in the lower time frame, what I'm going to see is a downtrend like this. Okay, you can see this downtrend like this little downtrend. So we are looking to now buy from here. Okay, buy from here to capitalize on this move. So that's what the multi-time frame analysis is all about. Okay, and it helps you to improve your timing, trade with confidence, and helps you with precise entry opportunities. That's the goal of using multi-time frame analysis. You can see this is a long-term high, intermediate, and then short-term. Okay, so this blue that you see here is the overall long-term bias. Okay, this blue that you are seeing here, that's the daily time frame. Okay, now the other one that you are seeing is also, let me give this a different color. This other one that you are seeing here, this green, okay, this green that you're seeing is the 4 hour time frame, and that is the intermediate uh, time frame. Okay, is the medium. Okay, you can see it here, and it connected to this high, right? This low here and this low of the daily time frame. Okay, so the other time frame is we have is the 1 hour time frame, which is the short term time frame. So you can see that here, and that connected with the intermediate time frame, came down like this, but as it's coming down, it made this. Okay, and this is another area here. As it was going, it made this. Okay, so it connected. Now the higher time frame is connected, the lower time frame is connected to the higher time frame. This is what we call wheels within wheels. Okay, we also call the fractal nature of the market. Fractal nature of the market. So whatever is happening in the higher time frame is going to affect the lower time frame bias. Okay, so now I'm going to show you guys this thing in the charts. So we're going to be practical about this. Let's look at what the high time frame bias is all about. Now, the high time frame sets the overall direction and determines the market environment. Key functions of the higher time frame shows the dominant trend. Okay, so this is the higher time frame trend. Okay, highlights the major swing lows. What are the major swing lows that we have? Okay, so we have the major swing lows. We have this. Okay, this is the low and this is the high. So highlights major swing highs and lows. Reveals large liquidity pools. Okay, so these are big moves, large liquidity pools, big money, big institution are moving price very aggressively. Identify strong supply and demand zones. Okay, so we have strong supply zones at this level here. Supply zones here, supply zones here, supply zones here. Okay, sorry, demand zones rather. So demand zones here. Okay, breaks a major marks uh, a major break of structure or MSS levels. Okay, so they have the major and the minor. Right, so these are the major ones here: break of structure, break of structure, break of structure. So think of the high time frame as the map of the market. It tells you where price is likely to go, and so this is the overall. Now you're going to have smaller trends inside of this. Okay, you have smaller trends. So what you see is that you see something like this, price making like this, something like this. Okay, okay. So this is going to happen in the lower time frame. So the high time frame bias affects the lower time frame. And you have to be watchful for the higher time frame bias because that in a way determines or tells where price is likely to go and that's what truly matters. The lower time frame precision. So the lower time frame uh, provides the timing and refinement needed for accurate execution. Okay, so what traders look for lower time frames are liquidity formations, micro trends that align with higher time frame, lower time frame market structure, break of structure and market structure shifts, refined supply zones, efficient points of higher time frame. So what this is telling you is simply this, that if you have let's say this is the higher time frame bias. Let's just give an example. Higher time frame bias is this. Now the lower time frame, because we're talking about lower time frame here, the lower time frame you're going to have this. Okay, so we're going to have in lower time frame. Now it says internal liquidity formation. So we're going to get all these internal liquidities. So you can see internal liquidity sitting around here. All right, micro trends that align with the higher time frame. Okay, so you see this trend right now is aligning with the higher time frame trend. Okay, because this is bullish move. I see the pullback. They're all aligning with the higher time frame bias. Lower time frame break of structure. These are lower time frame break of structure. Lower time frame break of structure. Define supply zone. So you have a supply and demand zone somewhere sitting around here. Over now sitting around here. Okay, then for those are into zones, for supply zone, we have supply zone here, supply zone here. Okay, so efficient points of entry with tighter stop loss. So now, if you're going to take a trade, your stop loss is going to be very tight, very tight. So you enter somewhere here, your stop loss below this level, and then you make your entry here, and you can target this high here. So if the higher time frame bias is the map, the lower time frame is a zoomed in view that shows the exact turn to take the trade. Okay, I think we have to go to the chart. But before that, let's look at the how traders combine both. So successful traders merge both perspectives to create a clear narrative, determine the higher time frame trend and liquidity targets, drop down, you can see drop down to the lower time frame to look for alignment, wait for lower time frame trigger like BOS, market structure, liquidity sweep, execute the position once the structure shifts in the intended direction. This approach blends high probability with high position. So it makes sense if you are following the higher time frame. If you if the market is going up in a higher time frame and then you are shorting the market, you are selling down, okay, it's not going to be temporary. The market is going up. Okay, so if you short here and you are targeting somewhere here, see the market stopped you out. Market stopped you out. After you maybe let's say a stop loss was here, market come and stop you out here. Okay, because you're trying to buck the trend. Alright, so going against a lot of pressures. So don't think you are smart enough. Nobody is that smart. You just go in the direction of the market. So if you look at this market right now, you can tell that this market is going up. Okay, you don't need anybody to tell you. You can just tell this market is going up. Even if I don't have this, let's say I took this away. Sorry, you can just tell that this market is just going up. Okay, but this is the bottom here, and this is where it is right now. Okay, so the market is going up. Now we use market structure. I've done a video about market structure. Okay, so this is market structure. Sorry, let me delete this. So market structure, break of structure, break of structure here as well. Okay, so these are indication that the market is just going up, right? So I've used market structure to judge that the trend is going up. Now we want to look for precision in the lower time frame because we want to take our trades. What we'll do right now is I'll go to the lower time frame. So we'll start with the 1 hour. So this is the 1 hour. Okay. Now you can see how the 1 hour is. Right here, they will see that pullback. You can see the market going down, right? It's trending down here. And if you analyze from here, you say, okay, where was the last break of structure? Let's say this was the last break of structure on this time frame here. And was it broken? Obviously, it was broken here. Okay, it was broken here. This is if you see this as the last break of structure. Oh, we have this here. Sorry, we have this here. So I'll just take this one out. So if this was the last break of structure, I presume we'll just do it like this. Okay, so the market was going down, and the pullback is now trending. The pullback on the higher time frame is now trending down on this lower time frame here. You can see this here, right here. This is a break of structure to the downside. Okay, break of structure to the downside. Now, after this was broken, you can see after this was broken, market started going up. The market started going up, went up for a while, and then started coming down again. So this is how you do your analysis. Now, let's go to let's check another. Let's use another lower time frame because we use the intermediate time frame. Let's look at the 15 minutes time frame as well. Okay, so on the 15 minutes time frame, what are we seeing here? You can see this market has been going up, has just been going up, the 15 minutes time frame. Okay, so where there was a pullback, right? You can see this pullback starting from here. Where there was this pullback, you can see the market was trending down here. It took out all of these lows, took out all of these lows, took out these lows. right? Right, and started printing these wicks here. But from here, you could say that this market was what in a downtrend. After it was taking all of these lows, it was taking all these lows, taking all these lows, taking all these lows, right? And the higher time frame, this was a pullback. Okay. So now let's say you want to enter a trade right now, and let's say the market was coming down like this. Now I will be looking for demand zones if I can find. All right. If you don't know about demands, you can watch my previous video about demands. So we have a demand here. You can see is a demand zone here. Um, we have a small demand here. Okay, small demand here. So you can see market tapped on that demand. Okay, now we can do confirmation if we want to. So let's say, so as the market was coming down like this, we want to look for a better place to enter. So we saw this demand. Okay, and I think that's the extreme demand that we have. There's no other demand that we have here again. I don't think I can find any demand again. Okay, and you will say this is also liquidity as well. Okay, so for those who don't know about liquidity, you can watch my previous video. Now, what is the confirmation again? We can confirm this with Fibonacci. Okay, so Fibonacci, you can see price tapped on this demand here and at the 1618. If you look closely, you can see this is 01618, right? It tapped on that. So as the market is coming to this demand zone and to this 01618, we'll now be looking to go on the lower time frame for entries. So now what do we have? Right? We're looking for a perfect entry. So now once market tapped on that was 0618 level, this is our Fibonacci level here, and this is also our demand um, level or demand zone level. So once market tapped on it, we're now looking to buy. So we're waiting for the market to get to this high at least, okay, to hit this high. This will be our target. Expecting market to come at least to hit this particular level back, right? Because it's an uptrend. So just I'll put this as my target here. Put this as target. Okay, so that's target. Now we are looking to buy to this target. So I'll be looking for opportunities to buy. So let's see if we can see opportunity. Now I taught my strategy to some of you guys. And it's also on my channel if you want to know. So after you tap that, let's look for a setup with our setup up here. We have this right here. I think this is a reasonable demand here. Let's see that impulse move right here. Which other one do we have? We have this one, but this one wasn't tapped. This one wasn't tapped. We have another one here, but this one was tapped. Okay, so you would have entered here. Which other demand do we have again? So let's use this one as our example, right? So all of this right here is just the demand zones here, I would say. Okay. So if you look closely, there was this liquidity here. Liquidity sitting at this lows here. Okay. So liquidity was sitting at these lows and the market came and tapped on this. And this was also a confirmation because what we're looking for is a break of structure. A break of structure a break of structure here as well, break of structure. Okay, took out liquidities lows that was sitting here and tapped on this demand here. So what are we going to be looking to do? We'll be looking to buy. So long it from here and put our stop loss either below this. I will put somewhere here, and I'll either use a fixed RR or I'll target this high here. Okay, so if you target this high like this, then you got yourself a 1:3. Okay, easy peasy. So I'll personally be looking to enter here. Once I see all these higher lows being made, higher lows, higher lows, higher lows, higher lows being made, then I'm looking to enter. Okay, so that will be all for how you can trade market structure. If you have any questions, drop it in the comment section. If you want to register for my mentorship, there's my number is at the comment section and also at the description if you want to. There's also a link in the description. You can also think about or considering getting my book. So that will be all. I'll see you guys in the next one.